Good day to everyone joining us from around the world. Whether you're just waking up midway through your trading session or winding down for the night, welcome. On behalf of the entire WeMasterTrade team, we're truly pleased to have you here with us for this global live stream session. My name's Paul, and I'll be guiding you through this exciting 2-hour journey as your host. Today's live stream is not just a presentation, it's a conversation. It's a window into the engine room of one of the most fast-growing and forward-thinking funded trading firms in this industry. And of course, I'm not here alone. I'm joined by two remarkable guests who have helped shape what WeMasterTrade represents today: skilled traders, mentors, and role models within our community. First, let me introduce the ever-composed, always insightful Hidden. Welcome, Hidden.
Thank you so much, Paul. Hello, everyone, and thank you for spending your time with us. I'm truly looking forward to today's sessions. There is so much to cover, not just about trading strategy or rules, but about the full ecosystem that we MasterTrade offers, from how you start, how you grow, to how you earn. This the kind of platform that doesn't just fight trades, it builds traders.
Absolutely. And next to him is someone who brings sharp analysis and clarity to every chart and conversation. He's strategic, he's sharp, and he's a real force in our trading space. Please welcome Lambert.
Thank you, Paul, and hello to everyone in the chat. I'm genuinely thrilled to be here. What excites me most about today is that we're going to unpack everything. Not just what WeMasterTrade offers, but how traders can truly take advantage of each part of our system, from packages to promotions to ceiling and long-term profit sharing. If you ever had questions or even doubts, today is the day to ask us.
And that's exactly what we're here for. Whether you're brand new to WeMasterTrade or already a part of our funded trader program, today's live stream is going to give you the full picture, not just the highlight reel. Over the course of this session, we're going to walk you through what WeMasterTrade truly is, what we believe in, how our programs are designed, and why we're doing things differently from traditional brokers or pro firms. Now, I want to be clear, this isn't just about sales, this is about understanding. We want you to know what you're signing up for, what kind of structure supports your journey, and how you can use that structure to not just succeed, but scale.
And speaking of structure, we begin by sharing the story behind WeMasterTrade, how we were formed as a funding project, not a broker, which is a very important distinction. Unlike brokers who profit from volume or losses, WeMasterTrade is built on the belief that your success is our success. We invest capital in traders, cover the risk for them, and share profit only when you do well. That's the foundation.
Exactly, and from that philosophy flows everything we offer, especially our trading packages, which we will be discussing in details. We will explain the logic behind each one, what kind of trader that they ever looked at our packages and thought, which one is right for me. Today we will answer that.
More than that, we also do a live comparison between packages. We'll break their pricing, account size, maximum drawdowns, consistency rules, and even payouts side by side to help you make a fully informed decision. It's one thing to see numbers on a website. It's another thing to understand the intention behind them.
Right, and once you understand the packages, the next question is always, how do I stay compliant while trading? So we move naturally into discussing trading rules, which honestly is one of the most important parts of today's session. We explain what the daily loss limit is, how it's calculated, why it's include both close and floating profit and loss, and how to avoid violating it, especially overnight. We go into the maximum total loss, the consistency ratio, and we even address common misunderstanding about trade sizing and risk per trade policy.
And we won't just explain rules in isolations. We'll explain them in the context of live trading decisions. I will share some personal examples of mistakes I have made when I first started trading under funded conditions and how I adjust. Because the rules aren't meant to restrict you, they are there to protect the integrity of your growth.
And while we're on the topic of helping you succeed, we'll be guiding you through our current promotion plan, including limited time discount codes, trader support, campaigns, capital opportunities, and how to properly qualify and submit proof. We had some amazing responses to our promotions, but also some confusion. So we'll be showing you exactly what to do step by step.
From there, we'll transition into a discussion on our scale plan, which I personally think is one of the most underrated parts of WeMasterTrade offering. Many people don't realize this, but we have a structural growth pathway in place. If you perform well consistently, you don't just get payouts, you actually unlock higher capital tiers. It's about getting funded once, it's about evolving into a six-figure funded trader.
And speaking of growth, one of the most powerful ways to build long-term master trades is through our profit sharing model. This is the heart of what makes us different from pro firms. When you trade on a funded account and generate profit without breaking rules, we share that profit with you up to 90%. But there's more on it to it than just the percentage. We explain the full payout cycle, thresholds, and timeline today.
Now, I know many of you watching today aren't just traders, you're also educators, influencers, or people with large networks. That's why we're also taking time to explain our affiliates program, and we'll do it transparently. We'll walk you through how commissions are calculated, how affiliate referrals are tracked, and more importantly, what you need to qualify for payouts, including a detailed explanation of the two referee rule and minimum funding conditions.
This is especially important because we want our partners to feel confident and clear about their earnings. We've seen a huge growth in affiliate activity recently, and we want to ensure everyone is promoting responsibly, understanding the terms, and building long-term income stream.
So, as you can tell, this is not just a surface level stream. We're diving into everything: packages, rules, removes, scale paths, profit sharing, and affiliate opportunities, all with one purpose in mind: helping you make the most informed, empowered, and confident decision possible.
And what we want this to be interactive, not just informative. So if you have a question at any point, please drop it in the chat. Our moderators are watching and we will answer as many questions live as we can. Your voice matters.
And if you're watching this on replay, don't worry, we will leave timestamp and summary below, and you can always reach out to our team with any follow-up inquiries. Our support team is incredible and they really care about helping traders succeed.
To wrap up this welcome, I'm glad to say this: WeMasterTrade is not just a platform; it's a commitment to be real traders, to create fair, structured, and scalable pathways for people around the world who are serious about trading as a profession, not a game. So, if you're here to grow, to understand, and to take action, you're exactly where you need to be. Let's dive into the journey together. Let's begin, and once again, welcome to the WeMasterTrade live stream. Okay, so thank you once again for being with us today. Now, before we dive into packages, trading rules, or promotional mechanics, We want to take a moment to zoom out and offer you the full picture of who WeMasterTrade really is, what we believe in, and why we built this platform the way we have. Because when you putting your trust and your trading into a company, understanding its philosophy is just helpful, it's essential. And so, this next assessment is about origin, intention, and impact. It's about how WeMasterTrade began, what values underpin the firm, and how those values translate into real tools and outcomes for traders like you. And to walk through that, I'm joined, as always, by two people who live and breathe these principles, Hidden and Lambert. Let's start at the beginning.
Thanks, Paul. To truly understand WeMasterTrade, we need to understand why it was created. Unlike many firms or brokers that involve from traditional financial institutions, WeMasterTrade was born with a purpose-driven mission to give capable traders access to capital, regardless of their background, locations, or financial situations. We were founded in 2022 as part of WeMasterTrade Group, a WeCopyTrade Group headquarters in Vancouver, Canada. While WeCopyTrade builds its name on signal sharing, investor networks, and copy trading tech, WeMasterTrade was designed to serve a more focused vision to identify, support, and scale high potential traders, giving them the pathway to earn professionally without risking their own savings.
And it's important to note WeMasterTrade is not a broker, that's just a label. It's a fundamental difference. We don't profit from spread or commissions. Our success is directly tied to the success of our traders. That's why everything we build, from our instant funding packages to our profit sharing model, is structured with alignment in mind. We take on the capital risk, we give you the roadmap, you bring the skill. But we also know that skill alone isn't enough, which is why one of our founding principles is education first. We don't want traders to blindly follow rules, we want them to understand the logic behind the structure. That's why we invested heavily into the WeMasterTrade Academy, a training ecosystem built to take you from beginner to consistently funded professional.
And that academy is something special, with courses ranging from introductory trading psychology on the way to advanced risk calibration and multi-asset strategy design. The WeMasterTrade Academy isn't just about theory, it's about implementation. We've designed a curriculum to match the real-world trading environments within WeMasterTrade, so what you learn, you can apply directly to your funding account. And to ensure that our system and content meet global standards, WeMasterTrade is proud to hold an ISO certification, which confirms that our educational products and trader development programs meet rigorous international criteria for quality, structure, and learner engagement.
Such certification is a big deal because it shows our long-term commitment to developing traders, not just collecting fees. In an industry where many so-called firms come and go, WeMasterTrade has positioned itself with real operational stability, compliance frameworks, and internal accountability. We are not here for a season, we are here to help build careers.
And we have seen that commitment translate into real story. If you visit our testimonial page, you'll find traders from Nigeria, Vietnam, Canada, the Philippines, South Africa, and all talking about how WeMasterTrade helped them not just earn more, but trade with purpose. They talk about passing challenges after years of struggling with retail brokers. They talk about finally being able to trade without the emotional burden of risking personal funds. We've had students become full-time traders. We've had women re-enter the finance world after career breaks. And we've had young professionals from underbanked regions finally access the market with a funded account. That's the impact. and that's what drives us.
And it doesn't stop there. The WeMasterTrade ecosystem is designed to grow with you. For those who want to stay engaged and up to date, we maintain a regularly updated blog session where our team of experts and educators share weekly insights, trading psychology breakdowns, market reactions, and platform updates. We believe that learning never ends, and we keep our traders informed. Let's also talk about culture. What makes WeMasterTrade different is just the product offering. It's the community mindset. We actively promote trader integrity, respectful competition, and knowledge sharing. Whether you're in a Telegram group, watching our YouTube series, or engaging with us on live support, you see what we actually listen.
And I will speak honestly here. In many platforms, the trader is just a customer. At WeMasterTrade, the trader is the product. Your performance drives the business. Your voice shapes the platform, and your consistency determines how far we can scale together. That mutual accountability is rare and is something we are proud of.
And if you ever doubted whether this path is real, whether a trading career is truly within reach, I encourage you to read our testimonial. Take a look at the funded accounts and connect with people who have gone through the system. The stories are real, the capital is real, the results speak for themselves.
To summarize, WeMasterTrade is a capital allocator, a talent accelerator, and an education-first trading institution. We're here to challenge the status quo of trading access, to build systems that reward performance over promotion, and to create real, scalable income opportunities for traders around the world, regardless of their starting point. This is more than a platform, it's trading movement, and if you're ready to be part of it, today's live stream will show you everything you need to know. Thank you, Hidden and Lambert, for that deep and honest walkthrough. Coming up next, we're going to take inspiration and connect it directly to our actual offering. That means we'll be discussing all the different account packages available at WeMasterTrade, how they differ, who they design for, and what kind of results you can expect from each. Now that we explore who WeMasterTrade is and the principles we stand for, it's time to move into one of the most essential parts of each live stream, an in-depth discussion on our account packages. This is where it all begins for most traders, choosing the structure that best aligns with their goals, their styles, and their current skill level. And when we say packages, we're not just talking about dollar figures, we're talking about the frameworks. Each package at WeMasterTrade represents a different pathway toward growth, and today we walk you through all of them, what they offer, how they're structured, and most importantly, who they're designed for.
Exactly, Paul. At WeMasterTrade, we don't believe in one size fits all model. That's why we have built two distinct product lines for traders: the challenges packages and the instant funding packages. Each line includes a variety of account size and configurations because we know that traders come with different strengths, risk appetites, and timelines.
Let's begin with the challenge model, a two-phase evaluation system built for traders who want to prove their skill before being allocated capital. It is structured fair and has become the most popular route for new traders entering the WeMasterTrade ecosystem.
In the challenge model, you begin with a simulated account, and your goal is to meet specific profit targets while staying within strict but reasonable risk parameters. There are three stages in total: phase 1, phase 2, and then the funded stage.
Check is done our 10,000 challenge, a great starting point for traders who want to minimize upfront costs while building a track record. Let's break it down phase by phase.
In phase 1, you will need to achieve an 8% profit target, which is $800 without branching a 5% daily loss, $500, or a 10% overall loss limit. That means $1,000. You will have unlimited time to achieve this. That's the key difference from many platforms. We don't pressure you with deadlines.
Once you pass phase 1, you move to phase 2, where your profit target drops to 6%. That's $600. The risk rules remain the same. And here's something unique. In phase 2, you already start receiving 30% profit share if you exceed the target.
Finally, once both phases are clear, you enter the funded account where you trade with real capital, have no profit targets, and your profit share jump to 90%. That's one of the highest in the industry.
This account is ideal for newer traders or experienced traders who want to start with lower pressure and learn the system. You're still refining your strategy or want to get a feel for WeMasterTrade risk framework before scaling. This is the perfect package to begin with.
Now, for those who are confident in their strategy and want to start with a larger account size, we offer 20, 25,000, 50,000, and 100,000 challenge packages. The structure is similar to phases, the same 5% daily and 10% total loss limits, but the profit targets scale proportionally.
For example, in the 50% dollar challenges, you will need to hit $4,000 in the phase 1 and the $3,000 in the phase 2. While the targets are higher, the leverage remains the same, 1 per 100, giving you room to adjust position sizing.
The 25K and 100K challenges are due for traders with more capital management experience, especially for those looking to eventually scale into larger funded accounts. You have already passed all the prop challenges or have a strong verified trading history. This is a good step up.
Every challenge package comes with a one-time fee. For example, just 45 for the 10K challenge. This fee is refundable once you become funded and meet minimum performance conditions. And if things don't go your way, you're eligible for a 30% reset discount to start fresh. What if you don't want to go through a challenge at all, but instead want to access real capital immediately and get paid based purely on results? That's where our instant funding packages come into play.
And this is where WeMasterTrade truly sets itself apart. Our instant funding model is designed to give experienced, disciplined trader the chance to trade real capital from day one. No evaluations, no demo stages, just pure live trading, backed by a structured, fair, and transparent system.
And what makes it even more accessible is that you can choose from several different account types depending on your style, preference, and goals. Today we are going to walk you through each of the 5 main instant funding packages: standard, 5-10-10, 5-10-0, 5-10-10 no PC, and customized. We will compare the details, but more importantly, we will help you figure out which packages is right for you.
Let me set the scene quickly. All of our instant funding packages give you live trading access from day one. That means no challenge phases, no evaluations. You pay once, follow the rules, and you're trading live capital. And every account, no matter the size, includes no time limits, up to 90% profit share, Scale up plan toward $1 million. Support for EAs, swing trades, scalping, and even HFT. So now let's go package by package. And as we go, hidden Lambert. I want you to jump in with your voice. Who should actually choose which one, and what kind of traders you've seen succeed with each?
Let's start with the standard packages. I always describe this one as the best friends for traders who just want stability. You are getting up to $200,000 in capital, which are very manageable 4% daily loss limit and 6% overall limits.
It's like that calm, steady account that doesn't push you to overtrade, and with the profit split up to 90%, there's serious earning potential even if you are taking a slow and steady approach.
And how about commissions?
Competitive across the board. Forex at $4 per lot, gold at $4 per lot, indies at $0.5, and stocks at just $0.07 per lot.
And everything is allowed: new trading, scalping, weekend holding, EA, HFT, you name it.
So for the audience, if you welcome who trades regularly, understands your strategy, wants a full range of access, and plans to play the long game, this is the sweet spot.
It's perfect for intermediate to advanced traders who already know the edge but don't want to stretch with target-based challenge. If you ever had an account prone due to unrealistic rules, you'll find the standard model refreshingly fair.
I would also say it suits swing traders. The 4 and 6% risk profile gives just enough flexibility to hold multi-day positions, especially with the weekend holding fully allowed.
Alright, moving up a gear, let's talk about the 5-10-10 package. Same capital ceiling, up to 200,000, but you now get a 5% daily loss and a wider 10% overall limit. Why does that matter?
The extra cushion is massive for traders who scale into position or take multiple entries per setup. You have got more room to breathe, especially in high volatility markets.
And the profit target here is also 10%, which aligns well with the risk window. Plus, you will get full support for scalping. EA's new trading is very trader friendly.
This is best for day traders, especially those trading assets like Nasdaq or gold that move fast. If you've got a tested intraday strategy and just need some risk breathing room, this is your package.
And also for traders who want structure but don't mind having that profit targets, the clear milestone motivates some people, especially if they are payout oriented.
Now, here's a personal favorite, the 5-10-0. You get 5% daily and 10% overall loss with no profit target, none zero.
And that's the blessing for high precision traders. You are no longer chasing the number, you just focus on protecting equity and growing capital slowly and safely.
This one is loved by low frequency trader and sniper. If you enter 3 to 5 trades a week, this is your space. You're not penalized for patience, you're actually rewarded for it.
Veterans, swing traders, risk-conscious traders, people who prioritize consistency over speed. If that's you, you will through here.
And let's be honest, not everyone wants to hit target. Some just want to trade well and scalp cleanly. This is their home.
Now, the rule breakers, or rather, those who don't want to be evaluated on how even their profits are. The 5-10-10 obviously removes profit consistency tracking, right?
Exactly, the same 5-10 risk profile. You're not required to keep your profit pro smooth.
That said, trade copiers are not allowed in this one, so it's for manual traders only, and you need to trade responsibility. But for aggressive traders who sometimes hit the big spike, this is the place.
Perfect for high-risk reward trader or anyone who has issue with consistency rules at other firms. You trade how you want, just keep it inside the drawdown box.
And last but not least, the customized package. This is WeMasterTrade saying, you know what you need, let's build it together.
You can adjust the loss over or loss to your liking. Plus, you can fund up to $400,000, more than any other account.
It's premium, flexible, comes with all trading style allowed, including EAs, new trading, weekend holding, high frequency trading, and more. Top tier professional, ex-hedge fund traders, signal providers, high volume traders, anyone with a very specific structure in mind, this package lets you build it.
I always say, if you have tried other models and nothing quite fits, build your own blueprint with customized. That freedom is rare.
So, to sum up, every instant funding package we offer comes with clear risk parameters, fair commissions, deep market access, and real profit potential. There are no time limits, and payout starts as early as 1 day in.
And no matter your strategy, scalping, swing, and aggro or manual, there's an account that aligns with you. The key is picking the right one now, and so you can start building consistency from your start.
And if you ever unsure, our team is available 24/7 to guide you. But the real secret, pick the accounts that fits your discipline, not the dream. The right fit always outperforms the biggest promise.
Up next, we'll walk you through exactly how to protect your account, avoid breaches, and understand the key risks and consistency rules that power our entire platform. Yeah, but before we come to it, let's take a short break. See you later. Alright traders, now that you've seen the packages, let's talk about the part that either makes or breaks your account. That's right, it's time to dig into the trading rules and how to actually stay compliant once you're funded. Because let's be honest, getting funded is exciting, but staying funded, yeah, that's where the game really begins. And the number one reason traders lose their account, it becomes down to one thing, the daily loss limit.
Yes, the traded daily loss is the one group traders think they understand until it kicks them out of their trading account at the 3:17 p.m. on a random Tuesday.
But here's the good news. Once you understand how it works, it becomes one of your best tools for risk control. So today let's break it down from top to bottom.
So, what is the daily loss limit? Also called maximum daily loss.
It's the maximum amount of loss you are allowed to incur in both floating and closed trade, or any single trading day. If your equity falls below that limit, even for a moment, your account is automatically closed.
And the key thing here is the daily loss is calculated from the height of either your balance or your equity at the start of the trading day. That's really important distinction and is what trips a lot of people up.
Let's work through a live example. Imagine it's the start of day 5. The balance is 105,000. Your equity, however, is higher, 107,000, because of open floating profit.
If you are on a 4% daily loss limit, we calculate it of the higher number $107,000.
So 4% of 107,000 is around 4,000. That means your equity for the rest of the day can't drop below 102,000 or boom, the account is gone.
Right, and I think it's important to point this out. The system is waiting for the close. It's in real time. Even if the trade is floating loss and you haven't closed yet, if your equity dips below that threshold for even a second, that's it.
Now let's reverse it. Let's say the start of day 7, your balance is 100,000, but your equity is 99,000 because your open trades are slightly in loss.
Since the balance is higher, we base the 4% on the initial balance, so $4,000.
So now your equity must stay above 96,000 throughout the day. If it drops to 95,999, auto liquidation kicks in. No warning, no margin call.
The system will send the market order to close all trades. Everything liquidates. Your account is disabled, and you can't trade again unless you purchase a new pocket.
And here's the kicker. The auto close happens when the system detects the threshold was crossed. But due to market fluctuations, your final P&L might look worse than the actual threshold. That's because the system executes a closure based on price slippage at the time of liquidations.
So if you only intended to take a 3,900 loss, one slippage spike in gold or Nasdaq, and suddenly is 4,200. That's why we say don't ride the edge.
Alright, let's talk about how to avoid violating this rule because this is where the pro master kicks in.
First tip, know your buffer. Never plan trades to take you right up to the edge of your limit. Leave at least 10 to 50% room below the max loss, especially in the volatile markets.
Tip 2, check your equity, not just your balance. I can't stress this enough. Most traders stare at their balance all day. If your floating loss is dragging your equity, you're heading towards a violation.
Tip 3. Use a dashboard or a checker. Inside WeMasterTrade, we provide risk dashboard that show your live loss status. Use them, check them, don't rely on memory.
Also, pause trading after a big loss early in the day. If you have lost 3% in the first hour on later sessions, maybe this time to stop and reflect, not try to revenge trades your way back up.
Another big one, trade smaller during news hours. If you're trading gold during the non-farm payroll with full loss sign, you're practically begging to break the daily loss rule. Cut position size and ride post volatility.
What are the top rookie mistakes you see when it comes to daily loss?
Number 1, over leveraging. Traders opening positions that are 5, 6, 7% of their account thinking they will close quickly. But if the trade turns red fast, it's already too late.
Number 2, holding overnight without checking exposure. If you hold 3 trades overnight, wake up to a 60 pip gaps, the daily loss could be hit before you even open your eyes.
And the third, assuming that close trades are all that matter. Do not remember equity includes both floating and closed positions. The total equity line is your score.
I always say this to new traders: the daily loss rule isn't your enemy, it's your account's airbag. It's designed to protect you from doing something irreversible.
Exactly, it forces discipline. You can't be aggressive, but only within a box. If you learn to trade inside that box, you last longer than 90% of the market.
And one last note, this isn't just about rules, it's about trust. WeMasterTrade funds you because we trust that you manage risk responsibly. The daily loss is there to protect the trust on both sides. Okay, so welcome back traders. In the previous segment, we covered the daily loss rule, and if you haven't already clicked that one, you're missing out. But now we move from daily boundary to the absolute boundary. I'm talking about the maximum loss rule, also known as your account stop loss. The line can be crossed not just for the day, but for the entire life of your account.
And this is where a lot of traders misunderstand how the rules work. They think, well, I didn't hit my daily limit, so I'm fine. But then a week later, they have chipped away at their accounts and suddenly liquidations.
The max loss rule is the last safety net. If the daily loss is your daily seatbelt, then max loss is your airbag. If the limit is hit, it means the account is deemed unsalvageable under your current trajectory and is closed immediately.
So, what exactly is the max loss rule? Let's define it simply. It's the total maximum amount you're allowed to lose across all trades for the entire account of your equity, that is, your real-time capital including open trades. If it rose below a certain percentage of your starting balance, your account is gone, period.
And unlike the daily loss, which resets every day, this one doesn't reset, it's cumulative. You can lose 2% one day, 3% the next, and if your total loss crosses the line, that's it.
And the percentage limit depends on your package. It's typically either 6% or 10% of your initial balance, not your equity, not your profit, but the original number you started with.
Let's walk through a concrete example. Suppose you have an instant funding account with an initial balance of 50,000 and your max loss limit is 6%, which is 3,000.
That means your equity can never go below $47,000 ever. Doesn't matter if you made 1,000 yesterday. The total loss from your highest point back down to that threshold is what matters.
And remember, this rule includes both close losses and floating losses. If you have lost 2,000 in close trade and you have had another 1,200 floating in red, your equity is now at 46,800. That's below the limit. Account close.
Just to be clear, it's not about the net gain or loss across trades, it's about where your equity stands in real time relative to the stop loss floor.
Here's where it gets interesting and a little tricky. Let's say your account grew to $51,000. Congrats, you are in profit.
But your max lot limit is still based on your original 50,000 starting balance. So if your limit is 6%, the threshold is still 47,000. What changes is how much room you have to fall before you hit it.
Exactly. You now have 4,000 in total buffer because 51,000 minus 47,000 equals 4,000. So your profit gives you cushion, but the floor never moves.
Once your equity drops below that maximum loss threshold, even by a few dollars, auto liquidation trigger, all trades are closed immediately at market price.
And again, like with the daily loss, if there's volatility or slippage, your accounts might close out below that line. That's just execution reality.
And most importantly, once it's breached, that account is permanently visible. You need to purchase a new package if you want to continue trading. No resets, no room banks.
Alright, let's get tactical. How do you actually trade inside this rule without constantly worrying about it?
First, track your total loss every day. You should always know how close you are to your max lot floor. Don't wait for the dashboard warning. Calculate it manually.
Second, use your profit as protection, not permission. Concrete floating profits are the green light to increase risk. Instead, consider locking in gains by reducing loss size when you are ahead.
Third, manage your floating loss aggressively. Even if you're positive overall, a single trade with poor stop placement can take you from safety to shutdown in a few minutes.
Fourth, stay cool when you are close. If you are down 5% out of your 6% limit, that's not the time to double down. That's the time to step away, pause, and rethink your entries.
The biggest mistake? Underestimating floating drawdown. Traders close weak loser and think, okay, I still got room, but they forget about the fourth trade floating minus 1,800.
Second, traders who chase recovery after the bad day. They lose 4% in one day, come back swinging the next day thinking they will make it back, and instead take another 2% boom violations.
Third, and this one hurts, ignoring slippage during major news. Even with a time stop, new candles can get you straight to your limit.
The max loss rule is there for a reason. It's not there to punish you, it's there to protect you from yourself. Every successful trader I know sees the stop loss whether personal and institutional, as a non-negotiable boundary.
Right, it's a reality check. If you're consistently bruising up against your max loss, the problem isn't the rule, the problem is your system or your psychology.
At WeMasterTrade, we're not just giving capital, we're teaching structure, and the Magnus rule is what separates gambler from professional. So remember, your MAC loss is a percentage of your starting balance, typically 6% on 10%. It's calculated using equity, not balance. It includes both closed and floating losses. And once bridged, your couch is gone. Coming up next, we'll explore the consistency rule and why steady profit matters more than big spikes when it comes to growing, scaling, and getting paid.
If you ever make 5,000 in one day, then make 200 the next 4 days, and wonder why your payout got flat, this next segment is for you.
Let's dip into the rhythm of profitability and how to stay consistent under the WeMasterTrade model.
Alright traders, we talk about daily loss limit, and we've just covered the maximum loss rule, two pillars of protecting your capital. But now it's time to shift gears just a little and talk not about risk, but about results. Because here's the thing, it's not just about staying alive in the game. If we master trade, we want to see traders grow, scale, and actually earn. And to do that, you need more than just a winning day. You need something called profit consistency.
This rule right here, the profit consistency rule, is what separates a lucky spike from a reliable trader. It tells us whether you can make money over time or you are just hoping to hit one big winner and roll the dice.
And more importantly, it's also how we evaluate if a trader is eligible for withdrawal, profit sharing, and even scale up. If you are funded and you're wondering why your payout didn't go through, this rule could be the reason.
So, what is the profit consistency rule? Let's define it clearly. The profit consistency ratio is a measure of how even your profits are from day to day. The more balanced your profits, the lower your ratio. The less consistent, meaning you have one giant profit day and then smaller or losing days, the higher your ratio.
The idea is simple. If 80% of your total profits came from one day, that's not consistency, that's luck or risk. What we want to see is traders who make profit day after day, even if it's small. That's what we can scale.
The formula is really straightforward. Take your best trading day's profit and divide it by your overall profit since you started the account, then multiply by 100.
Best day divide total profit multiply 100 equal profit consistency percent.
And just to be clear, best day refers to your highest close profit in a single calendar day, and the total profit is the sum of all your close profits minus any close losses or open losses across the life of the account.
Let's say you had the following result over 5 trading days. Day 1, 100 profit. Day 2, 200. Day 3, 50 losses. Then day 4 for 100. Day 5, 60. That means
That means your total net profit across 5 days is $100 plus $200 minus $50 plus $100 plus $60 equal to $410.
And the best day was day 2, that 200 profit.
so now we apply the formula 200 to 410, then the ratio is 0.4878 multiplied by 100 and you get the profit consistency ratio of 48.78%.
Now let's say your account requires 20% profit consistency, which is common. This trader is way above that. so they wouldn't qualify for a payout yet.
So even though this trader is profitable, they're not consistent enough. They had one big day that made the almost half of the total profit. That's not sustainable. That's what we're looking at.
And this is where I really want to speak to traders. If you are relying on one or two big days to carry your entire account, that's not professional trading. That's volatility. You can get lucky, but you will not stay funded.
And remember, it's not just about your payout this week. WeMasterTrade evaluates your consistency over time. Traders who show long-term balance are the ones who get scaled up, who get featured, and get trusted with more capital.
Alright, so let's address the numbers. What's an acceptable profit consistency ratio?
Typically, the rule is set at 20%. That means your best day should not exceed 20% of your overall profit. Let's say you are over the limit. Don't panic. You're not disqualified. You just need to keep trading and even out the curve.
Here's how to do that. Trade smaller size for a few days. Second, take smaller controlled greens. Aim for $200 and $300 for each day. The third is avoid big swing trades that could spike your ratio again. And the last, spread profit across multiple days, not one monster setup.
For those using EAs, monitor your equity curve. If your EA is skewing profit heavily into one day, you might need to rebalance it. The board might be profitable, but it won't pass this rule unless it's configured with payout logic in mind.
Mistake 1. Trader hitting target early, then taking the rest of the week off. That inflates your best day and leave the rest of your curve flat.
Mistake 2. Overtrading after a big day. Thinking I'm safe now and trying to squeeze more instead of averaging out of that high ratio.
Mistake 3. Thinking this rule is just a hurdle. It's not. It's a reflection of what we actually look for in our master traders.
At the end of the day, that isn't about controlling you. It's about building habits that can handle scale. If you can be consistent with $25,000, what happens if we give you $100,000 or more?
Exactly. Consistency is what makes you safe to invest in. We WeMasterTrade, we fund traders, but we also study them. This rule tells us whether you are serious about long-term trading.
And we've seen it time and time again. The traders who respect this rule, they're the ones who get multiple payouts, referrals, and draw into six figures for their accounts.
So don't fear the rule, understand it. Use it as a feedback tool. If your ratio is too high, great. That means you got profit. Now keep going, balance it out.
And remember, you don't need to calculate it manually. WeMasterTrade dashboard calculates your profit consistency ratio automatically. You can check it anytime under your statistics tab.
To recap, this rule is about balance, not volume. Aim to keep your best day under 20% of your total profit. Spread your wins across multiple sessions and monitor your progress in the dashboard. We've we walked through the daily loss limits, tackle the maximum account loss, and examine how your profit consistency shapes your long-term payout and growth. And the news keep coming. So, as a funded trader, your edge comes from staying prepared, not just with setup, but with context. So please, Hidden and Lambert, can you show everyone the economic calendar today?
Okay. And I'm Lambert. Today is Thursday, October 2nd, and we have a packed economic calendar with several high-impact events that can move the market.
We will guide you through the key release, share our analysis, and discuss potential trading setup in real time.
Let's start with the Canadian dollar. Earlier today, we had the BOC summary of deliberations and speech by Council member Rogers. These events usually give an insight into the Bank of Canada monetary policy stand. If they sound hawkish, CAD tends to strengthen, but any dovish tone could weigh on the loonie. Now moving to Japan, we saw a surprising contraction in the monetary base, down 6.2% year over year compared to a forecast of minus 3.8%. That's a much sharper decline and indicates tighter liquidity conditions. This is generally supportive for the yen, combined with the 10-year bond auction later in the day. Japan yen crosses are definitely worth watching. I'll keep my eyes on the Australia and Japanese yen and USD JPY as potential setup, depending on how the yen reacts.
Thanks. For the Australian dollar, the data came in weaker than expected. The goods trade balance was only 1.83 billion, far below the forecast of 6.13 billion. And household spending also slowed to 0.1%. This showed softer demand and weaker export performance, which puts pressure on the Aussie. Moving to Europe, we'll be watching the French budget balance, Spanish unemployment changes, and the Italian and Eurozone unemployment rate. Spain shows some improvement with fewer new unemployed, which is positive, but overall unemployment in the Eurozone remains steady at 6.2%. French 10-year bond auctions are also important, which weaker demand could push yield higher and weight on the euro.
On the squeeze side, inflation is cooling. CPI came in at minus 0.2%, a sign of mild disinflation. This reduces the pressure on the Swiss National Bank to tighten further. So we might see some CHF weakness unless safe haven flows take over.
And in the US sessions, things get even more interesting. We have challenger job cuts, initial jobless claims, and a strong rebound in factory orders at plus 1.4%. The labor data may show some cracks, but factory activity is rebounding, which supports the case for US economic resilience.
On top of that, we'll hear from two FOMC members today, Goldsby earlier and Logan later. Their turn on interest rate will be crucial for the dollar direction.
So let's put this all together with AUD weakness and GPY strength. Short AUD and GPY could be an attractive idea today.
Exactly, and considering US factory orders rebounding while Swiss inflation is cooling, long USD CHF might also be a logical setup.
We will keep watching the reactions in EUR as well, especially around the French bond auctions. EUR and USD could be choppy, so we will stay cautious there.
That's wrap up for our calendar overview. We'll now move into live market monitor and discuss trade entry if opportunity align.
Stay tuned. Keep your risk management tight and let's see how the markets react together. Thank you for joining us.
And that's a wrap for today's economic calendar with WeMasterTrade. Thank you for being here with us. If you found today's session useful, make sure to like, share, and follow WeMasterTrade for more daily updates and market insights. Remember, with the right information, every trader can master trade. See you in the next live stream. Happy trading!